It's cold out there. It's really cold. So yes, I'm working from home and yes, I got the hoodie on. I'm sorry, it just didn't feel like putting on the work stuff, but nonetheless, still professional, still doing the day-to-day grind. Don't you worry. Let's look at this week's news. So first and foremost, look at this storm. This is crazy. Dallas, Fort Worth, the right side is Texas, the left side is the country. You can see how big this storm is. But right side is the mostly sleet coming there for DFW, right in the heart of it. So good for us. Mortgage rates overall today down just a touch, but higher this week. It's been volatile. A couple of reasons. We'll get into those for a second, but you can see this. This is the 10-year Treasury. So this is not the normal chart I show you. This is almost the opposite. So meaning in this case, the higher you go, the higher mortgage rates are. So you can see the Treasury. When this goes up, the reason being is just all the talks of what you're going to see here, which is look between Greenland, the threat of like tariffs on the EU, that all kind of to makes things go up and down because again, the tariffs can be inflationary, which is not ideal. And inflation numbers did come out today. I didn't put a slide on them because they're kind of just boring. They just kind of like, meh. It was like 2 months worth of data because the government shut down. They're meh. But point is, if there were new tariffs on Europe, that could be bad, inflationary. Trump buying Greenland, a lot of the uncertainty and all that other fun stuff comes with it. But what people aren't talking about is Japan. This week had their, they had an auction, they had all this new stuff. It basically kind of, we're so interconnected globally that when their bonds don't look good and their debt's not good, it kind of just rocks the markets in general. So that's part of the reason why we've seen rates increase this week so significantly. And again, people don't know it. So what I found very interesting is you look at the chart on the left, or I don't know what you call it, this map, if you want to call it that. Here's how to understand this. GDP, think of it as just your income, how much you get paid. GDP's, gross domestic product, it's what a company makes, right? So it's the income that some country makes. So in this case, the debt is what the bills are. The United States over there, we're at 125% debt over your income, meaning we got more debt than we do income coming in the door. That's not good. But look at Japan over on the far right, 230%. So if you're making, let's just say $100,000 as a household income, that means your annual debts in this case are $230,000 in this example, 230%, 230%. So think about that. And what's interesting is the Bank of Japan, the BOJ, they hold over half of the actual debt. So even if you're to say, okay, because that's why they've been able to go so long, is because the government's kind of like, yeah, pay us later, right? Pay us back later. But eventually that comes to catch up. But the net debt, like if you strip that out, apparently it's still 77% of what they owe, which is crazy. So Japan is certainly kind of bringing down the global markets. That has not helped us. Sudan, I didn't even see that. It's 222%. They're not much better, but isn't that crazy? Um, Another thing that I saw today, let's focus on some good stuff. Supposedly, I don't know how they confirmed this, I'll be quite honest, but I'm putting it out here. The Dallas Fed somehow confirmed that we avoided a crash. I don't know how they confirmed that there was one coming, but the reality is that we avoided one. So what I think is interesting is if you look at the little dots, the dotted lines on the chart on the right, it shows that basically it's 0%. That's kind of where the observed housing prices are, right? So they observe that we're kind of just net zero. We've been down the last year-ish, the beginning of 25 into 24. You can see we're a little negative. We're basically about to zero where that is. But look at the little diamond, the one that's on the far right, September of 2025. It's up. It's up like close to 1%. So from a pricing standpoint, yes, prices have been coming down. You can see that, the most recent peak, early to middle 2024, that was closer to maybe 2% increase in prices. We've now come down to about zero. So this is the percentage of change. Doesn't mean prices have come down. It just means the pricing, the percentage has come down. So we're not necessarily making money, but we're not losing money. So I thought that was interesting. Again, how valid is this? I don't know, but it's the Fed. It's the Fed, so we'll put some level of trust in it. The housing market. This one I thought was really interesting, and it may push pause. Look at this, but the red is the actual housing prices. The yellow is house sales, so that's the volume as far as the number of houses being sold, and then the blue one is kind of like the house starts for new construction. So you can see, that's the far right where we're going to put our focus. That gray vertical line, that's the recession that happened during COVID. Since then, you can see what happened to real prices in homes. That red went really high up. I mean, it went to 13%, right? Annualized growth. But then you looked at the where we are today, it's still showing prices are up 2025, right? In terms of just the prices themselves. But the other piece is look at where the starts and the housing sales are. They're touch under zero. So again, on the left side, you got the growth rate. On the right side, you got the growth rate for just different measurements. But at the end of the day, the takeaway on this is just realize that things are about flat. So like the previous chart we just showed, things are just okay. Hopefully they're getting better. Fascinating. Don't know. I can't believe this, but it's apparently true. DFW, we had two of the hottest zip codes in the country in the month of December for homes. Number two, well, first of all, number one was Florida. Number two, Crandall, Texas. If you don't know where it is, I'll show it to you on a map. That was absolutely crazy to me. Number three, I don't even know where that is in New Mexico. Number four, Aurora, I get. Number five, Nashville, Arizona. Austin, number seven. That's interesting because they've been hurting. Number eight, North Carolina. Number nine, Florida. And 10, Dallas, Texas. So where are those places? By the way, the demand in Crandall, 266,000 is kind of the median home price there. So that explains from affordability and apparently, big deal, HEB's opening there. So maybe HEB's the secret. But anyway, all this to say, the little red, the heart is my office, by the way. But on this map, you got the two locations for where Crandall and Dallas is. These are the hottest zip codes. Also, last note with rates popping up this week, last week when they were low, and the week before, the refinance windows, quote unquote, closing. It makes sense, right? When rates go up, it is there. But if you are thinking about refinancing, please, please, please make sure you're doing it right. And that's our blog of the week, or our website feature of the week. Um, do a refinance analysis, whether it's with us or somebody else. Make sure you're doing it right. It's not just taking the monthly difference in payment, because that's not necessarily savings, especially if you start over with a new 30 year. So we have a refi analysis form, helps us determine exactly what your savings will be. We'd love to see you. If you have questions, just let us know. But then lastly, what a world, man. We got Olympics coming up in February. Dallas is hosting the World Cup. Is going to do hopefully some great things for, it says $1.5 billion of economic impact here. So we will see for North Texas. And then lastly, meme of the week. Complete the loan application. That's in your future. I like that. Cute. And lastly, shout out to Justin. And the person here was giving us shout outs for our tech stack. I agree. We got some phenomenal, it makes it easy. They've got some phenomenal marketing and tech wizards at our company that make things really easy for them. So thank you for that. You know what to do. Share, subscribe, forward, all that stuff, fun stuff. Most importantly, stay warm, stay safe, and if you're in North Texas, just stay off the roads this weekend and avoid the ice storm that's coming. We will see you next week. And remember, when you think mortgage, think Mark.